Assalamu alaikum everyone. Today I'm going to explain a very important topic in accounting, which is the fixed asset cycle. In this lecture, we will understand what a fixed asset is and how a fixed asset moves through different stages in accounting, from the time we buy it until the time we finally sell or dispose of it. Moving to the introduction part, um, what is fixed assets? Let's first understand what a fixed asset actually means. Uh, a fixed asset is something that a business buy to use for a long period of time. It is not purchased for resale but for daily business operations. For example, buildings, machines, vehicles, furnitures, computers, all of these are fixed assets. These assets help the business earn income for many years, not just for one day or for 1 month. Uh, Moving to the next slide, uh, which is our main topic, the fixed asset cycle. The fixed asset cycle simply means the complete life of a fixed asset in a business. It starts when the business or the company purchases an asset, then record it in the accounts, then charges depreciation every year, and finally, when the asset is no longer useful, it is sold or disposed of. So basically, this cycle shows how an asset is treated from beginning till the end. Moving to the next slide, that is, we have different stages of fixed asset cycle. The first one is acquisition, second one is recording and capitalization, third one is depreciation, the fourth one is revaluation or impairment, and the fifth one is disposal or sale of an asset. Moving to the first stage, that is acquisition or purchase of an asset. uh, the first stage is acquisition, which means purchasing the asset. When a company buys a fixed asset, the cost of the asset is not the only purchase price, but it also includes the other necessary costs like transportation charges, installation cost, and any expense required to make the asset ready for use. Mm, for example, mm, let me explain a very simple example of it. Uh, let's suppose a company buys a machine for raise 1 lakh, and the transportation cost we have is 5,000 and the installation cost is 3,000. So the total cost of an asset will be 1 lakh 80,000. So the second stage of a asset cycle is recording and capitalization. Um, After purchasing the asset, the next step is recording in the books of accounts. This process is called capitalization. Instead of treating this amount as an expense, we shows it as a fixed asset in the balance sheet under non-current assets. The reason is simple because this asset will give benefit to the business for many years, so we don't charge its full cost in 1 year. Um, yeah, and the third stage is depreciation. Now comes one of the most important parts of the fixed asset cycle, which is depreciation. Depreciation means reducing the value of the asset every year. And this happens because of usage, wear and tear, and with the passage of time. So, here is the example of it, that we have a machine cost of 1,80,000 and its useful life is 6 years. And now we have to calculate the annual depreciation by dividing the machine cost, which is 1,80,000, by its useful life, which is 6 years. So we will get annual depreciation of 18,000. So moving to the next slide, which is a revaluation or impairment. Sometimes the value of an asset changes before it is sold. If the market value of the asset increases, we may revalue it upward. This is called revaluation. And if the asset is damaged or become outdated, its value may decrease, and this is called impairment. So basically, this step is not done every time, but only when there is a major change in the value of the asset. So moving to the next slide, that is the final stage of the fixed asset cycle is disposed or the sale of asset. When the asset is no longer useful, the company may sell it or scrap it or remove it from the use. Uh, at this time, we remove the asset and its accumulated depreciation from the books and then calculate whether there is a profit or there is a loss. So we can understand by this very simple example that we have original cost of an asset is 1,80,000 and its, let's suppose its accumulated depreciation is 90,000, and now we will calculate the book value by subtracting its cost from its depreciation, and we will get 18,000 of its book value. And let's suppose we sold the asset for 20,000, and now we can easily understand that we have a profit of 2,000 because the asset sold for 20,000, which is higher than its book value. uh, Let me quickly summarize the fixed asset cycle. That the first one is the purchased, the second it is recorded and capitalized, third depreciation is charged every year, fourth revaluation or impairment is done if needed, and finally the asset is disposed or sold. So the last slide is conclusion. I will conclude this very quickly. Uh, to conclude, the fixed asset cycle explains the complete life of a fixed asset in accounting. It ensures that assets are recorded correctly, expenses are matched properly with income, and financial statements shows the true position of the business. So this topic is very important for understanding how long-term assets are managed in accounting. So thank you for watching.